What's up, guys? Jay Graff coming at you live with another M1 Finance and Robinhood portfolio update. Before we get started, I want to remind you all, if you all have been enjoying my update videos, please make sure you hit that subscribe button, turn on the notification bell so you all will be notified when I post future updates. So before I jump into my portfolios, I want to share a quote with you all. So the great Akon once said, "I get it into the sunrise, doing 90 on a 65, windows rolled down screaming, ah, I'm so paid." Now here on this channel, we are not about speeding and we are not about working all night, but we are about getting paid. So with that, let's get it. All right, so here we are in my Robinhood portfolio, and man, I cannot believe the stock market just keeps going up and up and up. This has been a great year for US stocks, especially US large cap stocks, and I just hope this growth continues. So on the day, I'm up about 0.35%. Over the past week, I'm up 2.48%. Over the past month, I'm up about 4.9%. Over the past 3 months, I'm almost up 11%. Over the past year, I'm up 23.6%. And all time, I'm up 24.7%. So something cool that happened this week is Visa has been going up. And Visa was one of the very first stocks I bought. I bought my first share at around $90, I believe. And I will show you all right down here. So I actually bought a share of Visa at $88.62, and Visa is now up over $200. So it's pretty neat being able to see that some of the stocks that I purchased have doubled in value. Just kind of goes to show you what can happen if you start investing early and hold on to your stocks and continue to invest. So the big stock I want to talk about this week is Chegg. I talk about Chegg a lot on this channel. It's because I use Chegg myself. They are an education service that provides help with homework and studying tools. So I'm a big fan of Chegg, and that's actually why I decided to buy their stock. They've done pretty good over the past year. They're up 29%. Over the past 5 years, they've had a ton of growth. And just for some reference, I bought most of my shares in this $35 range. As you can see, there was a pretty big dip. They purchased another company. I think a lot of companies on a lot of analysts on Wall Street weren't too sure how that would play out. But I think it turned out okay, and they're up around $43 now. So Chegg is one of those stocks that I wish I would have gotten in a little earlier on. I started using it in 2017, and I wish I would have noticed the power of it, how valuable I thought it was to me. When you all are looking at stocks, look for companies that provide a lot of value to their customers. That's the basics of business. If you're a company and you provide a lot of value to your customers, be that a good or a service, then your company in general is going to do pretty well. And in my opinion, that's also how you find a stock like Chegg that takes off and grows 500% in 5 years, is you look for companies, especially smaller companies, that maybe not everyone knows about their good or their service that they offer, but it offers a ton of value. So I currently have 21 shares of Chegg, and I think if it was to get up to about $45, I would probably sell a couple of shares. I'm up about 18% right now. I think there's a very good chance it'll drop back down to the 35 to 40 range in the future. I'm not entirely sure though. I usually don't do technical analysis, but something to keep in mind. I think now is a great time for a lot of people to take some profits off the table. You don't need to exit your stock positions entirely, but now is not the time to be greedy. It's the time to really revisit your investment goals, and if you think it's appropriate, take some money off the table, take some profits off the table. So other than that, not too much is new with my Robinhood portfolio. I talked about it 2 weeks ago, how I picked up some shares of this international stock ETF. So it basically tracks stocks outside of the US. The reason I purchased this is because I thought it represented a value right now. It's trading at about a 17 price to earnings ratio, significantly lower than the Standard & Poor 500, which is sitting at about 25. And I will pull up the Standard & Poor 500 for you all right now. So the Standard & Poor 500 is actually around 24. Historically, the Standard & Poor 500 has generally traded at between a 15 to 20 price to earnings ratio, and whenever it goes above or below that, it typically reverts back to that 15 to 20 level. Nobody really knows when it will do that, but it typically does that at some point. So this is kind of an indicator to me that maybe the stock market is a bit overvalued right now, a bit overbought, which is why I recommended taking profits. Now, keep in mind, I'm not a financial advisor. Do your research before you buy or sell anything. That's just my personal opinion and my personal game plan going forward. So that being said, we'll go ahead and jump into my M1 Finance portfolio, and I'll show you all how that has been doing. So here we are in my M1 Finance portfolio. As you all can see, over the past day, I'm up 0.2%. Over the past week, I am up 1.2%. Over the past month, I am up 3.1%. For the quarter, I am up almost 7%, and all time, which will be the same as this year because I started this portfolio this year, I am up 13.6%. So over the past week, I've added some more money into my M1 Finance portfolio. I also had someone sign up using my referral link, so I got $20 to invest. They also got $20 to invest. M1 Finance is running a promotion right now where if you refer someone to the platform, you and the person you referred both get $20 to invest. Typically that number is 10, but they're having like a January special. So if you all are interested in signing for M1 Finance, I will leave my referral code below. I really do think M1 Finance is a great platform. It's especially good for beginner investors, in my opinion. So check that out if that's something that you're interested in. So the biggest news from this week is on January 15th, I think I received like 16 or 17 dividend payments, which was kind of cool. It was kind of cool waking up to see all this money coming into my account. Now, granted, it's not a lot of money. Most of these are like 6-7 cents, but it's still cool seeing all that money come into your account, no matter what size it is. So I got a dividend from Illinois Tool Works, Leggett and Platt, Main Street Capital, Pembina Pipeline Corporation. You'll see the negative dividend here. I've talked about that in a previous video. I'll link that in the description as well. And essentially what this negative dividend is it's a management fee you have to pay to invest in a foreign stock. So Pembina Pipeline Corporation is actually based out of Canada. So that's why you see this negative 1 cent here. I got 3 cents from Ecolab, 1 cent from Interplus Corporation, 9 cents from Federal Realty Investment, 30 cents from Global Net Lease, 8 cents from Avalon Bay Communications, 11 cents from Cardinal Health, 6 cents from Cincinnati Financial Corporation, 4 cents from Cross Timbers Royalty Trust, another 8 cents from Cross Timbers Royalty Trust. I'm not sure why they do that. I'm not sure why I wouldn't just get 12 cents. I'll have to look into that. 10 cents from Digital Realty Trust, 3 cents from Realty Income Corporation. They're one of my favorite monthly dividend stocks. 4 cents from Stag Industrial, 8 cents from Whitestone Real Estate Investment Trust, 7 cents from Apple Hospitality Real Estate Investment Trust. And then on the 16th, I got 7 cents from Disney, and on the 17th, I got 5 cents from Medtronic. So I've talked about this before, but for any new viewers, I want to say that my portfolio consists of 100 stocks for M1 Finance, and it is made up of all the dividend aristocrats, which are companies that have increased their dividend for every year for at least 25 years. Then I bought a couple real estate investment trusts because they tend to have higher yields, and I wanted to increase the yield of my portfolio a little bit. And then I bought maybe 20 or so stocks that I just hold in my Robinhood portfolio or just really like as companies. All these stocks are dividend paying stocks. My strategy for this portfolio is to grow these dividend payments over time and eventually use them to pay my bills, or maybe even just use them for fun, use that money for fun. So I always think when you start out investing, it's always important to have a goal in mind. That goal can be as simple as, I want to save up for retirement. And if that's the case, you want to be in a little riskier, higher growth stocks. Whereas if you're trying just to save for a down payment on a house in 5 years, you're probably going to want to go with either very, very safe dividend paying stocks, or with bonds, or you might even want to just use a money market account or put the money in a high yield savings account. The basis behind this is you don't want to get into a situation where you need some money to make a down payment or to pay some bill, and all that money's tied up in the stock market, and maybe the stocks that you own are down 20-25%, and you're literally selling at the worst possible time. So just be mindful of your own investing and personal finance goals, and invest accordingly. So with that, I think I'm going to wrap up today's video. I appreciate you all watching. Like I said earlier, hit that subscribe button down below, hit that like button down below, and leave me a comment. What are your own personal investment goals? You don't have to go too much into detail. I'd just like to hear from you all. Are you all saving for retirement? Are you, like I said, saving to make a down payment? What is it? So comment that down below, and I'll see you all next time. JGraph out.